The following program is paid for by Absolute Mortgage, a division of Finance of America Mortgage LLC, Equal Housing Lender, NMLS 1071, AZBK 0910184. Tina Mitchell, MLO 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Finance of America Mortgage. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour on 1150 AM KKNW, the Saturday, June 4th show. I am your host and mortgage expert, Tina Mitchell. I provide you news on everything money, fresh information, and market trends in our local economy. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but I'm here to answer your questions, or better yet, connect you with the amazing guests that I have in studio with me today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And the lineup for my show today, Kim Fraser with John L. Scott, preparing your home for sale from start to finish. She's going to talk about staging, pricing, marketing, showing, negotiation, and most importantly, the close. Also in studio, I have Barry Bergner and Enrico Pozzo with Realogics, Sotheby's International Realty. Floating homes in the Seattle market we're going to talk about today. So excited. First time 6 years of my show that I've ever had a conversation around floating homes. So it's going to be an exciting show. Great information and great guests in studio. For more information on any of the topics discussed, please call into the show at 1-855-400-1150. Again, 1-855-400-1150 or online at themoneyhour.com. And let's go ahead and start out with a little money chat.
Money.
Today, I thought I would stick in my own arena, mortgages, and talk about PMI, or private mortgage insurance removal. Mentioned in earlier shows, I've talked about the different ways to get around paying mortgage insurance or monthly mortgage insurance. But I want to talk to you about how to remove monthly mortgage insurance if you choose that option. There's also mortgage insurance, for those of you that don't know, I've brought into previous shows that it is now a tax benefit. So you can write off, if your gross income is $100,000 you get to, or less, you can write off 100% of the premiums. For homeowners with adjusted gross income from $100,000.1 to $110,000, deductions are phased at 10% increments for each additional $1,000 of adjusted gross household income. So it's really great that that was brought back in. Now, today, again, I'm going to talk about the PMI or MI, when that can be removed. Now, it depends on the loan. And if you remove mortgage insurance, the mortgage insurance premium, MIP, is for FHA financing and is required for the life of the loan. So if you're using government financing through FHA, you have to pay the mortgage insurance for the life of the loan. Now, I've had clients ask me, well, should I just go ahead and wait until I qualify for a conventional, or wait until I have a down payment for a conventional, so that I don't have to have that monthly mortgage insurance for the life of the loan? And my answer would be no. And the reason why is because if you wait, you're going to have access to the same financing that if you bought now, took advantage of this market, see the appreciation, and then just refinance when you're in a position to get that conventional loan. So during that period of time, you're still getting the potential equity, the tax write-off, and all those other good things of homeownership. So get into whatever financing you can, and then turn around and refinance into conventional, and then you can look at the options to remove mortgage insurance at that time. Now, conventional financing is private mortgage insurance, known as PMI. So we're going to talk about how that gets removed. Now, the Homeowners Protection Act law governs when mortgage lenders can and must remove private mortgage insurance for a home loan. So lender's mortgage insurance, also known as the private mortgage insurance, is insurance payable to the lender for the trustee of a pool of securities that may require when they're taking out the mortgage loan. It's an insurance to offset the losses in case a consumer is not able to repay the loan and the lender is not able to recover its cost from foreclosure and sale of the mortgaged property. Now, PMI is required on a conventional loan with less than 20% down. So let's talk about the options of removal. First, we have automatic PMI termination. Once your loan to value is based on the original price you paid for the home is at 78%, the PMI will automatically terminate if the mortgage payments are up to date. Now, if you want to request PMI removal, you can request removal of PMI when the loan balance reaches 80% of the original home's value at the time you secured the loan. Now, PMI disclosure will be part of the disclosure package and list the dates when you're going to hit that 80% mark. Extra principal payments during that time can shorten the time to reach that 80%. To have the PMI removed, you must be current on your mortgage payments and request the PMI removal in writing. The lender may require you to prove that there is not a second loan on the home. And you may also have to pay for an appraisal to show that the home value has not decreased. Now, this is an extra 2% in the loan to value from 80% to 78%. Again, the 78% is when it automatically terminates. So you're not going in for any request to have it removed. At 80%, you can do that. But if we look at the extra money out of your pocket to mark your calendar for when it hits that 80% loan to value from the original price that you paid on the property on a $100,000 loan with an estimate of 0.78% calculation for the cost of mortgage insurance, this would be an additional $65 a month you would pay from the time you reached 80% loan to value to the time that it automatically drops off at the 78% loan to value. So based on today's interest rates, maybe you'd be looking at 80% target, about a year of cost. So there'd be $700 that you'd miss out on that opportunity. So again, just understanding how the removal of PMI or private mortgage insurance works can help save you some money. Now, alternative termination criteria. The Homeowners Protection Act dictates that PMI can stay on the loan for no longer than 1/2 of the term of the loan, even if the loan to value is greater than 78% when half the term has passed. So the lender must remove the mortgage insurance. This is final termination of PMI might occur with mortgage terms that are interest-only payments, negative M loans. If your value drops dramatically, then that would be an opportunity to where the alternative termination criteria might kick into place. Now, the most popular options for releasing the PMI because of the appreciation in your property is request early PMI removal. So you can request early removal of PMI when the loan reaches 80% again of the home's current market value. So in addition, you must have a minimum history of making mortgage payments on the loan. With most lenders, that's going to be anywhere from 24 to 36 months. So to have the PMI removed early, you must be current on your mortgage payments and request the PMI removal in writing. The lender may require you to, again, prove that there's no second mortgage on the home, and definitely you're going to be paying for an appraisal because you've got to show that that value has increased to hit that 80% loan to value based on the current market. Now, again, there are always ways to avoid paying PMI with less than 20% down or avoid paying the monthly PMI. If you listen to the show on a regular basis, you know I'm all about the buyout of the mortgage insurance. It's an opportunity for you to pay an upfront fee to eliminate paying that monthly mortgage insurance. Depending on your credit scores, different qualifying factors is going to determine what that cost is. But normally the cost to buy out the mortgage insurance, one-time fee upfront at closing, you're going to have that paid off in a shorter period of time than the minimum requirement of that 2 to 3 years. You're going to have to hold on to it, assuming you get the appreciation to hit the 80% loan to value. Now, if you don't have that additional cash to pay it up front, you can also, depending on qualifying, just finance it into the loan. So that's a pretty cool option. Again, when you look at the numbers, that's why I love mortgages so much, because it's all about the numbers. Again, those of you that are regular listeners to the show, I do own a mortgage software. It's all about education. And when you look at the analysis, it's really easy to see. You just look for red or green. Green means you're in the positive, red means you're in the negative, and it really helps to make a decision on the best loan program for you. There's also lender-paid mortgage insurance, where you're going to take a higher interest rate for the life of the loan to avoid the buyout of the mortgage insurance and avoid the monthly. Not one of my favorite options unless you're going to keep the property very short term. So that is my money chat for you today. Coming up next on the Money Hour, are you getting ready to sell your home? How do you prepare your home for sale from start to finish? Well, that's what Kim Fraser is here with me to talk about from John L. Scott right here at 1150 AM KKNW after this short break.
Are you tired of wasting your hard-earned dollars on rent to pay off someone else's home and at the same time losing out on the tax benefits in the process? Kim Fraser with John L. Scott has assisted over 800 individuals and families just like yours in obtaining the dream of home ownership. Kim has been practicing real estate since 2002 and is recognized in the top 1% of all real estate brokers. Kim is well equipped to assist you whether you are a first-time buyer or a move-up buyer looking to achieve your real estate goals.
Hi, I'm Kim Fraser, and I would love to assist you with your real estate needs. Please feel free to call me at 425-209-5638, or you can find me online at KimberlyFraser.com.
You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 AM KKNW, the June 4 show, bringing in expert advice and inside knowledge on today's events in our local economy and how it will affect your money. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And right now I have in studio Kim Fraser with John L. Scott. Kim, thanks for coming back in studio.
Thank you for having me.
Excited to talk about sellers and what they need to do to prepare their home. We're going to go through all of it for the listeners today, so it's going to be an exciting segment. A little bit about Kim. Kim, again, is with John L. Scott. Kim's been a real estate agent with John L. Scott for 14 years. It has been recognized in the top 1% of all John L. Scott's agents for 2015. This was Kim's fifth time earning the top 1% designation. Kim has sold over 800 homes in her career and sold 79 homes just in 2005. So pretty amazing numbers talk, and you definitely have the stats and the numbers to show that you're successful in what you do. And like any other industry, the more sales and things, opportunities that you're working with clients, the more that you're learning, because there's so many different things that are happening in the market, especially when we get into an environment like we are now. So I really appreciate your expertise, Kim. So today we're going to be talking about preparing your home for sale from start to finish. So Kim's going to take us through staging, pricing, marketing, showing, negotiating, and the close. So Kim, consulting with a client regarding to repairs needed for a property, deferred maintenance, landscaping, bringing in handyman, contractor, landscaper bids. How do you go through that process with your sellers?
So when I meet with them the first time, typically, most of the time I'm meeting a client at their home. Occasionally they'll meet me outside of the home at my office or at a Starbucks or something. And then we'll go to their home and kind of do a walkthrough of, what, in my opinion, needs to be done to make it market ready. I think sometimes as sellers, when you're living in the home a long period of time, you don't see things that we catch as agents and what buyers would be looking for and what a good buyer's agent's going to be pointing out as pluses and minuses to each property. So my job is to have as an honest of a conversation with the client as possible, letting them know things that they may or may not be aware of that we will probably need to remedy if they are wanting to get top dollar for the property.
Makes sense. And do you have your power partners of people that you're introducing them to make sure that they're getting that best quality of work and things that they're doing on their home? Absolutely.
I have a list of anywhere from general contractors, stagers, landscapers, roofing contractors, painters, different specialists in their field that I can refer them to so they can get, several bids to find out what the most cost-effective approach is going to be for the client.
And I think that's so important, Kim. And just in case you're listening and don't know this, as real estate experts, they can't get any kickback or anything from any of their team. They're put together because they want to make sure their job is to kind of oversee everything to make sure that their clients are getting taken care of in all areas. And so I think it's really important to work with those experts that you have already screened to make sure that they're going to do quality work. So keep that in mind if you're looking at selling your property. So Kim, preparing the property for sale, talking about cleaning the property, decluttering it, staging, bringing in house cleaners. You want your property to be market ready on that day. So how are you helping in navigating through that process with your sellers?
Well, I think the first thing we do is we do a couple things at the same time. You can be tackling like exterior projects and things like that, and sometimes interior projects, painting, carpet, some repair work and things like that. At the same time, maybe the property's being decluttered. A lot of times, most houses are not ready to be listed on a day's notice. Most people need anywhere from a week to a couple of my most recent clients. It took up to 2 months to get their properties ready to go just because they were living in the property and life was happening.
Yes.
So I have a couple that I started working with back in February that are just getting ready to launch now. So it's been almost 4 months for a couple of my higher end clients because there's just so many moving parts.
Yeah.
So we kind of get that decluttering process going first, what's not necessary. And it's a different process. I have one of my clients recently that just was actually moving out of their house altogether into their rental early because they didn't want to have to deal with trying to live through the process.
Yes.
That's not an option for most clients, unfortunately. So we kind of have to, minimize what they need on a daily basis to make the showings, especially if they have pets or kids and things like that they're trying to live with. So getting it decluttered. Once we're decluttered, then we can start the deep cleaning process to make sure everything's nice and shiny and looking good, and then bring in the stagers to make it show at its best light. And it's different too. Staging a vacant property is going to be a much different approach than staging an occupied property. Most staging companies are not really excited about bringing their really nice furniture into a home that's occupied, especially if there are kids and pets there, just because of damage to the property. We mostly then use the client's existing pieces, might bring a few pieces in, but probably the stagers are a little more selective where they're going to charge a little bit more in case of damage and things like that. And then you'll be bringing in, they're less concerned about like vignettes and accessories and mirrors and pillows and things like that as they are, nice high-end furniture. Is a little bit more readily received, a little bit better from the stager if it's vacant than occupied.
So the decluttering process, I would imagine sometimes it's a counseling process with the sellers, because it's not that their items and the things that they have are not beautiful and important and have value in them, but it's personal to them, so can you talk a little bit about what that decluttering process means?
Yeah, I think that, one, depersonalizing all their family photos, which is really, really hard. And I love people's family photos, so the houses that have them, I'm walking through the house looking at all of them, which can be a distraction because then I'm busier spending time looking at their cute family than the house. So I probably, I think most advice from most real estate agents is to remove any personal family photos and personal possessions like that off of the walls, and then just simplifying, paring things down, making things as neutral as possible, trying to appeal depending on what your demographic is in the market that you're serving, maybe putting little pieces in that fits in the Bellevue market. If, a lot of, Asian, Chinese buyers, maybe something that might appeal to them. So you want little touches of just maybe the culture of what you're kind of appealing to as well in the home, and kind of taking that approach as well and being mindful. But a lot of times I'll bring boxes over to my clients just to help stop, we'll kind of set aside a pile of, this all has to go, leave this out, and we'll let the stager work with this and let them determine what stays and what goes.
Wow. Yeah. So it's just about getting that emotional connection with people that are coming into the house. You want them to be able to visualize and envision themselves in the home, not the current owners. So reviewing recent solds in the area to come up with comparable properties, contacting an appraiser for very difficult homes with no available comps if needed. So walk me through how you're working with your sellers in comping the property to make sure, because it's a challenging thing to be able to determine what the value of that home is, and really being able to maximize the buyers coming in to give multiple offers and bid that up.
Absolutely. And that's a fine line. There's always a concern if you price it too low and nobody makes an offer that I'm selling my house for less than what it's worth. And I tell my clients, if you only have one offer, then it was probably priced at what it's worth.
Yes.
It's not in this market. If you price your home competitively, you should get more than one offer. As far as the East Side or Seattle market would go. Now, South End or up north, it might be a little bit slower, but
I hear they're starting to prick up too.
Isn't that crazy?
Yeah? It's crazy.
Oh, it's just a tough market right now. So that's the fine line. I have one that just sold. I listed it for $998 over in Lakemont, and we sold for 15% over. We sold for $150. 7 offers, 15% above list price, cash offer, 2-week close, no inspection, no financing.
Wow.
So we knew I thought, I wasn't surprised it went to 1.1. I figured our window was between $1 million and 1.1, so we kept it right at $1 million, knowing that we would let the market kind of drive the price.
Yeah. See, so if you're a seller right now, you hear that listed at 1, knowing it is worth or valued 1.1. I mean, there's a strategy behind this. And when you hire somebody, an expert like Kim, and her numbers show that she is, you've got to listen to the advice and what they're saying that you need to do, because it's about creating that sense of urgency on that property. So it's, again, it's a challenging thing to be able to figure that out. And that's why listening to your advice is so important.
Thank you.
So discussing with your clients their goals and motivation in regarding to the pricing, because I know that conversation can be a little challenging sometime, and get it right the first time. Occasionally buyers are overpriced their homes and can cause them to linger on the market. So how are you having that conversation with your clients to get them to understand that this is what we need to do to maximize the profit?
Well, I kind of share with them the high and the low. I always try to get my clients top dollar. I'm never trying to take the, easy way out to, get the price as low as possible to make my job easier. My job is to maximize the value for my client each and every time. However, no matter what my price is, it always seems like the client wants to push another 5 or 10%, or another agents come in and they're trying to get the price up higher. And so I kind of just put that back on their court. I'm like, well, what comps are they using? These are the comparables that I have. That sounds great. I had a client recently, I said probably 1.6, and they said, well, this other agent said 1.7. I'm like, well, then why don't we go to 1.8? Yeah. Because I don't see any comps at 1.7, so you might as well be 1.8. I mean,
so talk about that listing for, the agents that come in and say that they're getting the listing based on the higher price. It's not about the price that you put it on the market. It's about the price that's going to happen at the end. So tell my sellers out there the risk of overpricing a home.
Well, one example, I have a listing currently. That was the example that I just gave. I came up with a 1.598 list price. The other agent came up with a 1.7. I jokingly said, well, why don't we just put it out at 1.8 since we're not using comparables anyway? Might as well try to get you 1.8. I thought, what the heck? I'm paid on commission, so it works for all of us. So we ended up getting an offer. First week on the market, we had 2 offers. Both of them came under 1.6 million. One was 1.550. One was 1.580. I got both of them to come up to list price because I did have them want 2 offers. I did get them up to the 1.650 price. The first buyer ended up walking. So we came back on the market. They fell apart during inspection, came back on the market, and now we're just today going into contract with that second buyer that we didn't take the first time. Okay. Now at 1.6 million, which was my recommended price to begin with 3 weeks ago.
So how does that, work, Kim, when everything is online and people are searching based on value or based on what the list price is when, things are... I mean, I would think it would be better to list low to get people to look at it, where they could just actually decide not to even look at the home because...
And we're only talking like 3 to 5%. We're not talking 20% low. Yes. I mean, you're just slightly, if you're slightly at market or below, and I don't even think that price was extremely low. I mean, the price that I had recommended in the other agent was about $100,000 difference. Yeah. And we are getting basically the list price that I recommended, initially. And the other thing, too, that people have to take into variables, a 2-story is going to price out differently than a Rambler, than a 2-story with a basement or 1-story with a basement. Yep. Below grade square footage is not going to, comp out at the same price per square foot as something above grade. So I think as a consumer, a lot of people aren't educated to that as well. Even some agents aren't aware of the disparity and how appraisers value that below grade square footage. And so I think it's important as consumers and as agents, we educate the sellers and the buyers as to the pros and cons of, pricing and where are the square footages that you are pricing for each property. Each one's individual.
So you talked about appraisers. Let's talk about that for a second. What are you doing to to help with the appraisal process and preparing information for the appraiser and being that extra hand to help them with their job to be more favorable in the ending outcome? Absolutely.
Well, many times we'll have removed the key box just because the buyers don't or the sellers don't want to have people accessing the property after the sale. And also it gives us an opportunity as agents to meet the appraiser out there, answer any questions that they may have. So important. Can you drop a few tips of some homes that recently sold that may be a little bit not as nice or that were very comparable that they may or may not have seen? Yes. I actually do get a lot of calls in the Lake Tapps market I do sell a lot of waterfront homes down there as well. And a lot of appraisers will call me and ask me questions regarding other properties, so I think
you're kind of building that rapport with the community of appraisers.
Yes.
Brilliant.
So then it's always nice. So if they got to list your own or to appraise one of your properties, you've helped them out a little bit, or they're like, hey, do you know this property? How would it compare to this property? So I think as agents, it's wise for us to be cooperative with the appraisers if and when possible to make sure they're getting accurate information to help their own case, but will also hopefully help your clients down the road as well.
Totally agree. So planning market, planning or putting together the plan, pictures, virtual tours, videos, brochures, brokers open, mega open houses, where you're doing that list launch, websites for Zillow. What different things are you coaching with your clients as far as that marketing strategy?
Absolutely. Everything's online these days, so you want to make sure you have great online presence and and images and things like that. So I definitely always hire professional photography, always.
Okay.
I think some people still use their iPhones, believe it or not. Every once in a while, some agents, I'm like, oh my gosh, those are the most horrible pictures I've ever seen. But they somehow make it online. So I think for those of us who actually spend the money and invest in our clients' listings with professional photography, and it's more common today than it used to be, say 5 years ago even, that you have great, photography. It's important. It costs anywhere from probably a low end would be $350 up to $700 depending on the home.
Now, is it something that the seller pays?
No, the agent
it's all
would
part
pay.
of it. Okay, all right.
I mean, for me, I absorb that cost.
Okay,
I think some agents may try to pass that. I do know a few agents that do pass that cost off. But I think that as the agent, that's part of the expense that you're hiring me to do. So all of this is included in my listing fee. I don't put any additional cost back onto the consumer. Everything would be taken care of for me. I feel like that's what they're hiring me for.
The staging and all of that?
Depending on the commission structure, staging would be. So I have a few right now that I've paid for, and I have a couple that my clients had paid for, depending on what we've worked out as far as the commission and things like that, and what we've done to be able to put that together.
Makes total sense. So when it comes to the pictures, because I know that, first impression, it does matter, because that first impression they have of the home when they're looking at these different properties online, the pictures, it can have that extension of the emotional connection once they make it out to the property. So what other special things is important in marketing? Because I know you do a lot of high-end homes, and I would imagine that even steps it up to a different dynamic when you're going through that marketing.
Absolutely. So a couple other things that we've done recently too. We have a new video that we've been doing. It's a Matterport video, which is like a 3D tour, which is really exciting.
Wow.
So you can basically, it's almost like you're walking through the home. It just takes that whole virtual tour experience up to a new level. So we actually purchased the software and cameras ourselves this last year, so we're not limited to having to work with a photographer schedule. We can just do it in-house and get it taken care of when the weather is decent, and we're not having to worry about that. Another thing that we do, so videos. So we can do on the higher end listings too. We can do a video shoot of that house, and it's really nice. We can either have it narrated by myself or by my clients, and telling them, what features they loved about the home and why they loved living there. So that's another really nice feature that we can also add, which is an option for consumers as well. And those run about $1,500, anywhere from $1,200 to $1,500, depending on, the company that you use. But I think it's a nice, invaluable, addition that you can add to for those higher end listings and things like that. So those are a couple of things that we do. Of course, high quality, brochures, nice quality materials. I think it's always a reflection of, the property and yourself as an agent in the presentation of the listing. Not only selling the house, but you're selling yourself for anyone in the future looking to do business or hire someone to list their home. And then another thing too, brokers opens, depending on what area you live in. Some brokers opens are more well attended than others, depending on what region the agent's working out of. Different markets are better attended than others. And then open houses are really, really popular in King County. So King County open houses get a ton of traction, a lot of activity every weekend. The last weekend, I think I had 35 to 45 people per day at my open house.
Really? Wow.
Which is exciting. That was like in the $1.3 million price point. So, an average price point for the Bellevue area. But I guess upper average, isn't that crazy?
That's crazy.
Yeah.
1.2 is just an average price here on the east side.
It's a little higher, but Mercer Island, it's a 1,200 square foot Rambler. Just kidding.
Oh my.
So, so the open houses are getting a lot of traction and things like that. And typically what we're seeing is that agents will list a house on a Thursday, brokers open Friday, Saturday, Sunday, open house, review offers, maybe Monday, Tuesday, or Wednesday of the following week. If any received.
And so when you mention a listing launch, what is that?
So that first weekend, something that we really do heavily at John L. Scott is getting out that day to the community, the day before the open house, putting little door knockers, little signs on their door handle, inviting them to the open house, getting kind of an early entry for neighbors about an hour ahead of time, inviting them to come in because they're all curious anyway, so you might as well just go address them and say, hey, come on over, I'd love to meet you. And also another opportunity, maybe they have a friend or family member wanting to move into the neighborhood as well, which is great. And then just really getting lots of balloons, lots of signage. I have about 20 signs at my open houses that we put through the neighborhoods that we're doing the open house, trying to draw as much traffic in as possible, which is nice. I just had a mega open house a couple weeks ago. We mailed out 4,500 invitations to the closest 4,500 residents, inviting them to come by and see the property.
A lot of residents to get that marketing. So negotiating multiple offers, if received, and the offer period and backup offers, how do you coordinate all that, Kim?
So basically, talk with the client prior to listings. It has to be put in the MLS that you're having an offer review period. And any offers, if no offers review, or if any offers are received, will be reviewed on such and such a date. And it's really, you have to be really careful as a consumer. We can't put a date out there of Tuesday, and then all of a sudden on Sunday we're taking another offer without really having contacted everyone. And if you've done an open house, it really puts the consumers out there at a disadvantage. So if you're going to put an offer review date out there, make sure it's a date that you can stick by.
Okay.
Just because people maybe will wait or get their hopes up and think they have a few days to kind of wait and get their financing together and things like that.
Yep.
So we usually just get that date and then collect offers. I did one last night, received 3 offers on a listing, and by 10:30 last night we had it signed around and pending.
Congratulations.
So thanks.
So close. Before we close up our time together, let's talk about closing up this property for the seller. So there's a lot of stressful things that happen during a closing process that if you're working with a great agent, buyers and sellers just think this process can, just go smoothly, but all the work starts once you're under contract. And so what are some things to be cautious of, and what are you doing on the back end to ensure everything is running smoothly for your sellers?
Well, one of the things that's really important that I've noticed recently, that sellers sometimes have moved or they haven't given the escrow accurate forwarding information.
Okay.
So as far as loan payoffs, things like that, first, second, HOA contacts, things like that, it's really important for sellers to make sure that their escrow company has, all of their pertinent information for the payoffs, because sometimes that can slow down the process.
Okay.
So that's something really key that the seller needs to make sure they get that escrow packet turned into escrow right away. And then for myself, just kind of managing escrow, managing through the inspection process, the other agent expectations, any work orders that need to be done, and then just making sure whether the seller's in town or out of town, coordinating signings, things like that, key exchange, and then recording numbers, and then closing.
I know you're doing a lot more than that, Kim. You've got all kinds of things coordinate to make sure the lender is doing their job, escrow's doing their job, titles here. There's a lot of stuff that happens behind the scenes.
Absolutely.
And, I just, as our time wraps up here, for any sellers, and if you're a buyer, Kim works with both buyers and sellers, working with an expert in the local market with proven numbers, proven success is so important. This is a lot of money. This market is crazy. It's competitive. It's hard. But you can have a smooth process if you're working with somebody that's got a smooth system, and just this is what you do day in and day out. So, Kim, thank you so much for spending time with me today. Look forward to having you come back again in the near future.
Thank you, Tina. A pleasure as always.
Coming up next on the Money Hour, how would you like to live on a floating home? My gosh, I would love to live on a floating home. I'm excited. I have 6 years in my show, and I've never had an opportunity to talk about floating homes with experts. This is what they do, and they work with a lot of houses on the water. I have Barry Bergner and Enrico Pozzo with Realogics Sotheby International Realty right here on 1150 AM KKNW after this short break.
Hi, I'm Minnie Driver. Ovarian cancer can affect women of all ages, even in their 20s. There's no early detection test, and symptoms can be subtle. So know your risk factors, such as family history of cancer and presence of gene mutations like BRCA. Take control of your health. Talk to your family and your doctor. The sooner the better. Meanwhile, we'll continue our collaborative research into diagnosis and treatment. To learn more, go to su2c.org/ovarian.
You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, June 4th show. It's a great day to talk money. That's why I'm here, and that's what the show is all about, how to make money, save money, to have a better quality of life for you and your family. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but to talk with the guests that I have in studio, or to chat with me, you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150, or online at themoneyhour.com. And right now in studio, Barry Bergner and Enrico Pozzo with Realogics Sotheby International Realty. And we're going to talk about floating homes in the Northwest, and very excited to have you guys in studio. Thank you so much, Barry. This is the first time, or you've been here, Barry. Enrico, this is the first time that I've had a conversation with you, so very excited.
Yeah, thanks for having us.
Yeah, thank you.
And a little bit about Enrico. A passionate real estate professional with over a decade of experience and proven results. Enrico is one of the most respected brokers among his peers and clientele alike. Experience, knowledge, innovative, and commitment to his clients are the foundation of his business. Enrico has been acknowledged with numerous distinctive top sales awards, both locally, nationally, and internationally, and consistently ranks in the top 1% of brokers. Enrico and his team provide a depth of market knowledge and a keen understanding of diverse property types, including unique specialties in floating home residence, waterfront residence, condominiums, single-family homes. He's respected in the agent community with proven strength and initiative, solutions, and negotiation, both skilled critically and close to your home successfully. A little bit about Barry. Barry's been selling real estate for 13 years, experience and voted best in client satisfaction as published in Seattle Magazine every year since 2005. He's a certified negotiation expert, certified residential specialist, and has been given has his green realtor designation and accredited staging professional. So again, as we took us to commercial, I'll let my listeners know how excited I am for this segment and conversation with you guys, because we're talking about floating homes, and what a better place to buy a floating home than right here in the Seattle area. So Barry, how long have the two of you been partnering together?
Enrico and I started working together we started working at the same time, started selling real estate in 2002, and took us 10 years to figure out that we'd like to partner together. So since 2012. And the motivation behind that was twofold. One, to offer our clients better service, where there's always somebody there. If one of us is busy, there's always somebody there to help, collaborate on issues. There's always something new that's coming up, something we haven't run into before. So we collaborate on strategy and marketing. And so second reason was with this profession, you can work 24/7 for a whole lot of days in a row. And we wanted more balance in our life. And so working together affords us the opportunity to take vacations and know that our clients are going to be well taken care of.
That's awesome. And obviously with the time that you guys have been working together, because it's hard to do that unless it's the right partnership. And you guys have proven that obviously with the time behind it. So that also means obviously you've got a great balance there, which is going to be great for your clients. So I've been doing this hype up on what we're going to talk about, which is about floating homes, but that's not all that you guys do. So can you share with my listeners, what type of properties do you guys sell?
Yeah, so our website, seattlebydesign.com, is really known for floating homes and condominiums. However, we do most of our business by referral. So because of that, we sell single-family homes, townhomes, waterfront homes, pretty much the whole.
So anything that your clients need, it's just you have that niche for the water, the floating homes and homes on the water. So Enrico, are there different types of houseboats out there?
Definitely. There's there's almost as many types as there are houseboats. But there are two main categories. There are floating homes, and they're also what are now called on-water residences, which are, in the past we used to call those house barges, and they're differentiated. Like if you think of the movie Sleepless in Seattle, that's a floating home. And it really looks like a traditional home built on top of a raft or a float. And a house barge or an on-water residence has a hull similar to a boat. It's more boat-like, and sometimes they have an engine, but they do have a hull, and it requires completely different kind of maintenance. They're financed differently.
So what's the ratio difference between? I mean, would you say it's 50-50 or majority?
No, the majority are floating homes. And I think maybe there's like 20-80. I think that's the ratio. But that's a guess. I don't have that number exactly. I know there's about 500 floating homes. I work much less in the in the kind of house barge range.
Okay. So again, any other difference between the floating homes and the houseboats?
Between among floating homes, there are differences as well. Like it has a lot to do with the community that it's built in.
Okay.
Some communities are condominiums. Some communities are co-ops. Others are lease docks, and then there are also some private docks where people own they don't only own the floating home, but they also own land up the upland property. Sometimes there's a house on top of it and it's all one, considered to be one property.
Okay, so a lot of different types of the floating homes.
And each time we take on a listing, we just have to kind of figure the puzzle out. What do we have to work with here?
Yeah, wow.
And it often requires different types of inspections and different types of lenders. Sometimes title insurance is available, sometimes it's not.
So what about where you can find these floating homes in Seattle, and how many are there?
There are about 500 left.
So there's 500. There's 500 left, meaning just 500, not on the market, obviously, but there's a total. Or is there 500 on the market?
No.
Yeah,
There's about 500 total floating homes in Seattle left. And I'm saying that because there used to be about 2,000 of them.
So what happened to the other 1,500?
Well, a lot of those have been eliminated over time, and a lot of that actually had to do with the construction of I-5. When I-5 was being constructed on the and kind of start to straddle the north side of the lake. The other thing had to do with the World Fair in 1962. At the very bottom of the lake, they were going to build a boatel for the World Fair, and they eliminated some floating home communities, and they were never, the boatel was never built.
Okay.
Now, the reason, like if you go to East Lake and you go to the docks on Fairview, you see that they're much longer than they're anywhere else. And that had to do primarily with the construction of I-5. A lot of those floating homes that were removed from docks there were actually then allowed to be tacked on to existing docks on Fairview.
Oh, wow.
And so that's why sometimes you see about 18, 19 floating homes on a dock on the Fairview side.
Okay.
Other sides tend to be shorter.
So it's such a... Oh, go ahead.
You asked me which neighborhoods, where you can find floating homes in Seattle. And, you'll find them on the Fairview side, so the East Lake side, West Lake side. There's some in Fremont. And then there's some in Portage Bay, on both the North Shore and the South Shore.
Got it. So how is the competitiveness in the market on that? I mean, when you're not buying a floating house and what's happening in the other market, I mean, do you have competitive bidding going on when there's an available property?
It's been a very interesting year this year. Some floating homes have sold right away and above asking, where there has been a bidding war. But overall, it's been a little bit slower start. However, traditionally, this is kind of when the season begins, right before the 4th of July.
Yeah,
4th of July.
Well, that might be nice to live on one of those.
Brings a lot of people by, and people start to dream about living on a floating home.
Yes.
And that's really when the sales. So our market is just beginning.
Got it. So how did this come about that you got interested in being an expert in the floating home market?
Well, it's kind of where my whole past comes together. I was raised in a boat building family.
Okay.
My background is architecture, and you put the two together, and you kind of have a floating home. And I moved here. I was raised in the Netherlands, kind of a seafaring nation. Right? And when I moved here to Seattle, and I discovered these properties, I just instantly fell in love. And similar to the Netherlands, also on a floating home, you live really close to your neighbors, and it's very social. And that's the best part about it. Like, you don't see that, but what's wonderful is the social.
Do you live on a floating home?
I lived on it for 10 years.
Okay, all righty. So, Barry, financing. All my listeners know that's my expertise is doing mortgages, but I don't have any options to finance a floating home. So where do you find financing for your clients? What banks out there are financing floating homes?
Right.
And how is it different from a traditional loan that I would do?
So floating homes are a different animal, and lenders tend to not to like different things.
Yes. They're getting a little better now, but yes, you're correct.
Yeah, so it does change, but locally there's 3 banks: Sound Community Bank, Seattle Metropolitan Credit Union, and Pacific Crest Savings Bank.
Okay.
That are financing most of the floating homes. The interest rate can be slightly higher.
All right, which is not bad when interest rates are under 4% right now.
Right.
So.
And the term of the loans can be a little bit shorter too. So typical term of the loan is 25 years versus 30 years.
Which is not bad. So there's no balloon payments or crazy things like that when you're getting into financing floating homes.
Correct. No.
Yeah. What about the down payment requirements? What's a minimum down payment for a floating home?
I believe it's 10%.
Okay, so that's not bad. I mean, it's there's good financing that's available for them. So, does a floating home require more maintenance, Enrico?
I would like to actually say that it requires less maintenance.
Really? That's a surprising answer. I would think there would be a lot more maintenance.
A lot of people are worried about about moisture problems and humidity, and that's not a problem at all. Really, a floating home functions very much like a single family home. And it's built exactly the same. Okay. It's just built on top of a float and a raft.
Okay.
Even above the water line, the inspectors that we use are just on land inspectors.
So let's talk about that, because you'd mentioned inspectors before. So what is the difference when you're getting your home inspected of a floating home versus a traditional house? What's the difference between the inspection for that?
Well, the big difference is an underwater inspection. So we, when we get divers to go underneath, and they look at the. There's different types of foundations. They're concrete foundations. Some of them are concrete rafts. Others are concrete basements, and they're kind of giant tubs. I have a client whose daughter lives underwater, actually, and she has a giant porthole, and she can look through the window and see fish and turtles swim by. So.
Oh my gosh, that is
her
so
father dives in the
cool.
water every 3 months and cleans the window.
Really? Wow.
But and then there's the traditional rafts that were constructed by the loggers ever since the early 1900s, around 1900. A lot of the logs are still from the 1890s, actually, when you see those. So they're white cedar logs, and they're kind of like inverted pyramids of logs with stringers over them to form a raft, and then a house is built on top of that. Okay.
Tell the story about the houseboats, and who lived in the houseboats before they actually started becoming popular and people bought them. Because I think it's just amazing, the history.
The history, as far as I know it really started with the loggers.
Yes.
People that just didn't have any money to live on land. And both East Lake and West Lake were flanked by logging companies. That's when it was a working lake. And the tall ships would come in and they would load up timber to take elsewhere. And
they were just little shacks back there.
And they just were building little shacks on top of the lake. Now, the wealthy kind of looked at that and it's like, well, that's kind of cool,
Yeah, exactly.
So pretty much instantaneously, they started to claim their spots as well.
Yes, makes sense.
And so they were always built side by side.
So you also talked briefly, but I like to go back there about the community and the lifestyle of what it's like living on a floating home, and the community that you have with your neighbors. I would imagine the dynamics has got to be a little bit more special than a traditional neighborhood.
It is. I mean, I have some of my favorite memories in Seattle there. My wife and we got married on a dock, where the minister actually was a person that lived on the dock. And he was pretty well-known Seattle, author that lived in Seattle. And I remember, we had guests just like a traditional wedding, but the people on the dock, they on their houseboats, they had tables with food that they had prepared, and then the men were dressed in what is called dock formal, which means that it's shorts, shorts, and then a suit and tie from the waist up.
Okay, right? Nice. So prices. I'm sure there's a range of different costs associated when you're purchasing a floating home. So what is that range? Anything that's on the market right now? I mean, what are you looking at?
Well, anywhere from $400,000 to $3.5 million.
Yeah, that's a huge range. So you can get a $400,000 houseboat.
It's going to need some work.
Yeah. Okay.
But
so not a move-in ready then. It's
going to be small and probably not in great condition. It's going to probably need some updating.
Okay, and then it goes all the way up to that 3.5.
Yeah, and typically as you get out farther on the dock, the homes get more expensive. There was recently, actually just today, a home came on the market for $3.2 million. in Wards Cove, and anybody out there interested, let us know. We'd be happy to arrange a showing for you.
You heard it right here, just listed.
Yeah, just listed. And totally a wide range, something for every budget.
Yeah. So what about how many approximately are available right now? Do you guys know?
I think there's probably like 8 or 10 of them are currently listed. There's never much of a selection. So generally, I meet clients, and I keep track of them, and I put them on a search. Yeah. And as soon as one comes available, I send it to them, and if it clicks, if it's a match for what they're hoping to find, and I just advise them to go take a look at it right away.
So I'm really surprised, and I don't live on a floating home, but I'm here asking. There's only 8 properties available. Our market is crazy. Why are they not more popular? I mean, us Seattle people, we love the water. It would just be an amazing lifestyle. So why aren't there just tons of people that are trying to get those only 8 available, and you're not seeing multiple?
Well, we are seeing multiple. Seeing multiple of it, but it varies a little bit from houseboat to houseboat, and it's just not been as aggressive as single-family homes. And now, it actually normally the trend is actually that floating homes are kind of the highest appreciating asset in Seattle.
Really?
Because it's like owning downtown waterfront.
Yes, exactly.
And it's very unique to, Seattle also has a very unique floating home community in the sense that it's freshwater. Mm-hmm. So others like communities like Victoria and Vancouver and also Sausalito, they're affected by tide. So sometimes they have like 8-foot swings between high and low tide. Here, the level is pretty much consistent. It varies a little bit between winter and summer by about a 1.5 feet. And then also the proximity to the downtown core is very, very close. And again, Vancouver and Victoria, it's a little bit further removed from downtown.
Yeah. Actually,
Victoria is fairly close.
So we're hearing a lot more, especially in the Seattle market, about Airbnbs. And can you buy one of these maybe 8 houseboats out there right now and run an Airbnb?
That is very unlikely that you're going to find one.
Because I would think really profitable.
There are a few properties where you could do that with, but pretty much those are going to be private properties. Most condominium and co-op docks, they have rules for rentals. Some of them don't even allow rentals at all.
Wow.
And others will only allow long-term rentals. And some of them only will allow rentals either during hardship or during, let's say, like a sabbatical.
Well, I guess that makes sense because it's such a niche community that you want to keep the spirit of that and not have renters in there and, definitely people coming in on short term. So that makes sense. It's protecting the community there for the homeowners.
Absolutely.
Yeah.
Don't forget sound travels over the water. So, if you have somebody come in, if you have somebody come in over the weekend, they throw a party on it. It's just a nuisance to all the other neighbors.
Of
that's
course.
Why they're a little bit more protective.
Makes
on the water
total sense.
Than elsewhere.
What about additional monthly fees that are associated to owning a floating home?
Well, often on a co-op or a condominium dock, you have homeowner dues. Often that includes water, sewer, garbage. On a condo dock, the taxes for the slip and for the houseboat are paid separately. On a co-op dock, the taxes for the slip are included in your homeowner dues.
Okay.
So that's one thing to be aware about.
Property taxes, I know like right now it's probably around 1 to 1.2% at the high end. What is that in comparison to floating homes?
It varies from community to community. Yeah.
Okay.
There's no set rule.
And are there still spots available that you can purchase and then put up your own? That they're seeing, that people are actually building houseboats?
The community that Barry was just talking about, where that really expensive houseboat came on for $3.2 million today, it's called Wards Cove. And that has been the last community where new slips came available. And, each of the houseboats is brand new. And a few of them are still in the construction and being built right now. But I think from now on, it's going to become more and more difficult as, because all the moorage now is required to be conforming moorage. And so the problem is you don't only need to have the water space, but you also need to have upland parking available to be able to construct a residence there.
Okay. So what else is happening in your guys' arena and this craziness going on? In expert advice that you have for my listeners, Barry, what do you got for them?
Well, it's interesting. I have so many people, friends, and it's a great market. It's a hard market.
It is a hard market.
It's a great market for sellers.
Yes.
And but 6 years ago, buyers were beating up sellers, and now sellers are beating up buyers. So it takes a lot of preparation. Get prepared as you can. You're probably aware. Get your buyers fully underwritten before you make an offer, and then have great strategies to increase your chances to be the successful buyer that's out of the 10, 12 offers that you're probably going to be competing against. Yeah,
well said. The key thing is to have the right people working for you and have the process and that negotiation and the strategy, as you said, prepared so that you can go out there and win. Well, thanks you guys for coming in. It was fun having a conversation about floating homes, and I appreciate your time today.
Great. Thank you, Tina.
Thank you. So nice to meet you.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy the rest of your weekend. Thanks for listening to the show. I will be back, same time, same place, next Saturday right here at 11:50 a.m. KKNW.
The preceding program is paid for by Absolute Mortgage, a division of Finance of America Mortgage LLC, equal housing lender, NMLS 1071, AZBK 0910184. Tina Mitchell, MLO 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information.